Well, good morning, good afternoon, and of course, good evening, traders from across the globe. Oscar coming at you on a Friday afternoon with video number 2575. These videos are geared to teach you the art of technical analysis. Good day, traders. Remember the risk involved in trading. Never, ever, ever trade anything without stops. You can lose way more than you think in this business. Put your stops in first. Never trade without them. All right, so E-mini S&P for trading today, Friday the 12th. Well, as of Thursday night, OMNI had a red OMNI. OMNI went red, which told us to go short. We did go short. This bar populated today. We sold it right at the high, and it dropped down. We got out somewhere down here, had a fantastic trade. Thank you, OMNI. For short-term trading, OMNI's bearish, red OMNI. We knew that last night. If you've been following me for longer-term trading, I've put in a thesis that the bottom is in. But we are day traders, and it's not always going to be a feast on the upside. So my theory, if it gets unproven or proven wrong, I'll be the first one to let you know. For now, this looks very bearish. I'll show you what I mean by that. For short-term trading, E-mini S&P looks horrible for Sunday night, Monday. Look at this one. Watch this. This one's even worse. Look at this Russell 2000. Look at how bad this looks right now. Now let's take that average and just make it a little closer to the action here, right? So this average needs to be a little closer to the action, and watch how deadly it is. So look at the way this average has just capped anything that the Russell 2000 has tried to rally through, right? And it created this big black resistance line, right? And that black resistance line has kept us in check every time you get near it, right? We'll turn that black. So it's been keeping the market in check when it hits the black resistance line, and down we're going. Now, this could also be a really ugly bear flag. Now that's ugly. The whole thing is just yuck. S&P looks nasty. Russell looks nasty. If you go back to the S&P, 2 days ago, when we had a green OMNI and I was doing a video about the upside, if you take these 2 days away, that looked pretty darn good. We were breaking through resistance. We had a green OMNI. Up, away it goes. We didn't have a red OMNI. But then you add the last 2 days trading in, and it looks a lot different now. OMNI's turned red, failing at the resistance. So you saw that, and I just showed you the RTY, the Russell 2000, which could literally have a huge bear flag here. That would be this monstrous thing right here. And if that's the case, boy, are we going down. You see the resistance in the black resistance line, as well as the average. So lots of reasons to say yuck when you look at Russell, E-mini S&P for the last 2 days, Russell for the last few weeks. And then if we go over here, take a look at this guy. Where did I leave it? Oh, here. Look at the transportation average, looking even uglier. Left shoulder, head, right shoulder, that looks ugly. You're now below the 200 bar moving average, which would be this. Below the 50 bar moving average, the darker blue. Lighter blue is the 200 bar moving average. Inner right shoulder, all of that looks ugly. So what I'm showing you is almost counter to the bottom being in, except for this. If you're a fan of mine, a fan of the OMNI, if you've been watching my videos, I came out with a video on Feb 7th, 2023, the beginning of February. And it was called, "This is How Stock Market Bottoms Are Born." And in this video, I showed a series of charts depicting how I called the top in 2007. And then I went on to show you how we are now in the bottom being built in 2023. All right, so if you'd like to go back and see that video in its entirety, I will put the link under this video, but here's the date. So there's a thesis that the bottom is in. And the Dow Jones Transportation Average would absolutely say no, right? That's ugly. Head and shoulders points to lower, below the 200 bar moving average. None of that looks good. And the Russell 2000 certainly pointed to ugly. Now, the E-mini S&P chart I showed you was not ugly, just the last 2 days. Let's look at this very same chart, this exact same chart. Let's look at it again in a different perspective. This is the transportation average. This is the exact same chart I just showed you, that same head and shoulders as this green one. But if you go back and watch that video, I showed you this is how tops and bottoms are born. Tops and bottoms are born this way. And this is that same chart. And what it is a series of head and shoulders that start all the way back here. Once the top was in at 18,246, that black line up there, the market plummeted all the way down to 11,946. And during that plummet, it started making a series of head and shoulders with smaller head and shoulders inside the larger ones. So if you can see what's happening on this chart, the big green is shoulder, head, shoulder. Then there's an upright inverted head and shoulders right here. And there's another inverted head and shoulders here. And another one there. In here, there's an upright head and shoulders that's in these two shoulders. And then this itself is a little shoulder, head, shoulder. And then we start another big green shoulder with baby head and shoulders in it. And then that lends itself to another, what could be a head of this head and shoulders inverted. But at the same time, it's really just the shoulder of a big inverted head and shoulders with lots of head and shoulders inside of it. And then we move to today, and you're just looking at more of the big bottom forming. So for now, as scary as the transportation average and the Russell 2000 look, I say they're just forming their bottoms, and that doesn't happen easily, and it takes a long time. And don't forget this view. NASDAQ weekly bar has done everything I've told you about it in all the videos. It's held the 200 bar moving average even during COVID. It rallies every time it hits that average. A major rally takes place. You hit the average, a major rally ensues. We didn't even hit it there, right? You got near it. If you actually hit the average, a major rally ensues. In 2009, 2008, it broke the average, but once it got back above, a major rally ensues. I'll take you back now to today. This is after the 2008-9 hit. It just continues on, major rally. Watch the 200 bar moving average. You've seen this in many videos. It almost hits there. You get a major rally. You keep your eyes on it. It almost hits there. You get a major rally. While you're at it, please subscribe to these videos. Like and share them. I'd appreciate it. It does hit here for COVID. Doesn't break, but it hits. And a major rally ensues. And we come down, jig around it a little, and it's starting to go up. And I think these green lines show you its trajectory that a major rally should ensue. And then you've got this. You see that bull flag right there? Well, let's blow this chart up for a moment. That bull flag is on a weekly bar, and you're starting to get above it in your NASDAQ. So for now, the short-term picture is ugly and scary. The longer-term picture looks fine. The bottom is still in. And I wanted to share that with you before the weekend starts so you can do your planning for next week. Short-term, ugly. Long-term, looks fine to me. Traders, thanks for tuning in. Remember to like and share these videos and, of course, subscribe. And then say this to yourselves whenever you're in a trade after your stop has been placed. Stops are in. Emotions are out. Traders, if you're having trouble with your trades, make sure you come to livewithoscar.com and join my Platinum real-time trading service. I will see you at livewithoscar.com.